Traditional markets are built around pauses. Trading days end, settlement windows close, risk is handed off with the clock. Digital asset markets remove those pauses. Settlement, liquidity, and price discovery now operate continuously, and institutions must adapt to markets that never shut down. Continuous markets change operating models. By 2025, always-on trading is no longer an edge case. Bitcoin, stablecoins, and major on-chain venues trade and settle around the clock. Most digital asset volume now occurs outside traditional equity market hours. This changes more than execution timing. It changes how institutions organize people, authority, and risk. Staffing shifts from coverage to continuity. In traditional markets, overnight desks monitored positions and escalated issues. In 24/7 markets, that model fails. Price moves, margin calls, and liquidity events occur at any hour. Institutions now deploy follow-the-sun teams with standardized playbooks and defined decision rights. Overnight desks are no longer caretakers. They are active operators with authority to act. Consistency across time zones becomes the priority. Risk limits must adjust in real time. Continuous settlement compresses reaction windows. A sharp move overnight can trigger exposure before senior teams are available. Static daily limits are no longer sufficient. Institutions now rely on dynamic thresholds that adjust based on volatility, liquidity, and asset type. Stable settlement assets are treated differently from more volatile instruments. Risk enforcement becomes automatic, with escalation paths defined in advance. This turns risk management into an operational discipline, not a reporting exercise. Escalation can't depend on hierarchy. In always-on markets, escalation must be explicit. Institutions define severity levels, response authority, and time-bound actions regardless of time zone. Some events require immediate intervention, others demand consultation within strict windows. Silence is no longer acceptable. Clear authority structures determine whether speed becomes an advantage or a liability. Overnight exposure becomes a choice. In traditional markets, overnight exposure was often tolerated. In continuous markets, it is deliberate. Institutions actively manage overnight risk using position reductions, collateral buffers, and automated de-risking. Stablecoins increasingly support settlement when banks are closed, raising expectations for constant control. When assets move instantly, unresolved exposure is no longer acceptable. Discipline becomes the differentiator. Always-on markets reward preparation. Institutions that succeed treat 24/7 trading as a permanent condition. They invest in governance, standardized processes, and integrated risk oversight. Resilience is no longer defined by access. It is defined by discipline. Always-on markets require always-on thinking. Kenson Investments publishes research that helps institutions understand how trading discipline, risk controls, and operating models evolve in continuously settling markets. If your organization is adapting to 24/7 exposure, clarity starts with the right operating framework. Visit kensoninvestments.com and connect with our team.